in financial trading. Horizontal support and resistance. Horizontal support or horizontal resistance are horizontal areas within financial markets where price will change direction. I have a diagram of a horizontal support. Price is bearish, but when it reaches the support area, it changes from a bearish direction to a bullish direction, so price reverses. A horizontal resistance area is a horizontal area within financial markets that changes price from a bullish direction to a bearish direction. Once again, from my diagram, price is bullish. Once we reach the horizontal resistance area, price becomes bearish. The easiest way to remember the difference between support and resistance is support is active under price and acts as a floor for price, whereas resistance is active above current price and acts as a ceiling for price. The strength of horizontal support and resistance, and for any support and resistance for that matter, is determined by the amount of times the support or resistance is tested and continues to change price direction. So we have a horizontal support on this bottom diagram. Price is bearish, it reaches the support area, it becomes bullish, price comes back down to test the horizontal support. Once again, price changes direction from bearish to bullish. The support area is tested a third time as price comes down. A third time, price changes direction from bearish to bullish, and a fourth time. As price is rejected repeatedly, this could be considered a strong support area. Notice how I'm saying support and resistance areas rather than levels, as support and resistance is generally not a specific price or level in financial markets, but a general area. So let's look at some horizontal support and resistance on real-life price charts. This is the Euro USD, it's an hourly chart, and on this chart we have a good example of resistance in financial markets. You'll notice that price comes up to this area, comes back, goes to the area again, comes back, goes to the area again, and finally goes to the resistance area a fourth time before completely being rejected. If we draw a trend line to mark this area, we could identify this as strong resistance. Price is rejected 4 times. This is a daily chart of the FTSE 100, the stock index for the United Kingdom, and once again we have a good example of resistance. Price is rejected here, here, and again here. If we mark this area with a horizontal trend line, you can see this rejection more clearly. If I zoom out, you'll notice that this resistance area has acted as resistance in the past. We have 1 rejection, 2 rejections, 3 rejections, 4, 5 rejections, and possibly a 6th rejection. This is an example of strong resistance in financial markets. This is a 30-minute chart of the US dollar Swiss franc. On this 30-minute chart we have an example of horizontal support. Price has been rejected 4 times on a support area. If we mark this with a horizontal trend line, it should be more clear. We have 4 clear rejections. 1, 2, 3, for. How can we trade support and resistance? Just as recommended in the video previous to this one, which was about Fibonacci retracement, once we have recognized this support, it may not be wise to just place call options when price reaches this level, but instead to look for a signal of a pin bar or an engulfing candle. If this support has acted as support in the past, we may have noticed this first rejection on our screen, and we have a pin bar, a small body with a long wick. That's our signal to start placing call options. The pin bar is also followed by a bullish engulfing candle, and price goes on the upside. The third time this support is tested on this 30-minute chart is here. We have a very strong, clear pin bar. That's our signal to start placing call options. We also have another pin bar here and a bullish engulfing. The fourth time this support is reached, we have another clear pin bar, and price shoots on the upside. Another signal to start placing call options. And this way of trading is the same with resistance, looking for bearish pin bars and bearish engulfing candles on clear resistance levels. Now you know the basics of horizontal support and resistance, let's look at dynamic support and resistance. Dynamic support and resistance is created by moving averages. And just like Fibonacci retracements, dynamic support and resistance works because it's self-fulfilling, because so many traders, professional and retail traders, use dynamic support and resistance as part of their trading. On my diagram, I have a moving average. As price comes to test this moving average, price is rejected, turning from bearish to bullish, and is rejected a second time, turning bearish to bullish. So this moving average could act as a dynamic support when trading financial markets. Let's look at dynamic support and resistance on a real-life price chart. This is a 30-minute chart of the pound against the dollar. I have a moving average on my chart set at the period of 100. Price is uptrending, and our moving average acts as dynamic support. You'll notice that price pushes, and when it pulls back we have a clear rejection and a bullish pin bar, and then price goes for another push. Later on, this dynamic support is tested again. Price is pulling back, price is rejected. We have a bullish pin bar followed by a bullish engulfing candle, and price goes for another push. It changes direction. And a third time, this dynamic support is tested. Price is pulling back. It's very much short-term bearish. The dynamic support is reached and price changes direction. This is another chart of the Great British Pound against the US dollar. This time we have a daily chart, and our moving average now acts as dynamic resistance. Price moves bearish, pulls back to this moving average area. We have a bearish pin bar, a bearish engulfing candle, and price moves strongly on the downside. Once again, price comes up, is rejected, and changes direction, and a third time, and a fourth time. 1, 2, 3, and 4. How can dynamic support and resistance be traded? Just like horizontal support and resistance, we can look for pin bars and engulfing candles that agree with the price reversal. So with a dynamic resistance, we're looking for bearish pin bars and bearish engulfing candles. For a dynamic support, we're looking for bullish signals. We have a bearish pin bar and a bearish engulfing. Signals to place puts, and price moves heavily on the downside. We have two bearish pin bars, more signals to place puts. A bearish engulfing, another signal to place a put. Obviously, support and resistance is not always going to hold. Eventually, it's going to break. So no matter how strong a support or resistance area is, it is not going to last forever. In this diagram, we have a clear resistance. Price is rejected 2 times, but is eventually broken, and price moves strongly on the upside. We have a dynamic support on our second diagram. Price is rejected twice, but eventually broken. So what happens when support or resistance is broken? More often than not, a resistance level, when broken, will then become a support, and a broken support may become a resistance. If we go back to the original concept that supports are floors and resistance areas are ceilings, think of support and resistance as a block of flats or apartments, where ceilings become floors and floors become ceilings. As we move up the block of flats or apartments and pass ceilings, they become our floors. If we're on the ground floor, we have a floor and a ceiling. When we're on the first floor, our previous ceiling has now become our floor. And the same works with support and resistance. If we're coming down the block of flats or apartments, then floors can become ceilings. So when a support is broken, it can become a resistance. Let's look at this once again on real-life price charts. First of all, let's stick with our example of our dynamic resistance. Price was rejected 4 times, 1, 2, 3, and 4. But let's look further along this chart to see what happens. You'll notice that the resistance is eventually broken. Price is closing well above the moving average, and this dynamic resistance has now become a dynamic support. The moving average acts as support here, here, and here. This is the FTSE 100 index. It's a daily chart, and once again we have an example of resistance turning support. This change of floors becoming ceilings and ceilings becoming floors. We have a dynamic resistance. When this is eventually broken, it acts as dynamic support. This is the US dollar against the Swiss franc. We have a clear horizontal support. 1, 2, 3, and 4, but is eventually broken. If we move the chart forward, let's see what happens. Our support turns resistance, 1 rejection, 2 rejection, 3 rejections, and moves strongly on the downside. So the question always is, how can we use this in our trading? My personal opinion is that if a support or resistance is broken, is wait for the pullback. Wait for a signal such as a pin bar or an engulfing candle, and then place calls or puts to whatever agrees with the newly formed support or resistance. In the next video, I will teach about trend, support and resistance.